This beer bug is ruining a lot of gains, if not all the gains our economy has made within the last 1 to 5 years. In this video, I will cover 3 stocks I'm buying while the stock market continues to crash that will guarantee to bring you back some serious gains. Welcome back, my name is Alex Sanchez. In this channel, we talk about money, investing, and real estate. If you want to learn how to start making, saving, and investing more money so you can eventually become financially free, please consider subscribing. Before I begin, I want to make it clear that this video is for entertainment purposes only. I'm not a financial advisor because I didn't go to college, and I didn't carry massive student loan debt, and I didn't learn the fancy lingo. Please consult with a licensed advisor and take my opinion with a grain of salt. Also, for those of you guys wondering what platform I use to invest, I use Robinhood. If you want to receive a free stock, you can find the link in the description down below. And yes, it's a referral link, so I will be upfront with you and say I get a free stock as well. I like to be transparent. It's hard to preach and convince the average person to invest right now because we're heading into financial crisis and the stock market is seeing some steep declines in value. The whole world is panicking as we speak because of a beer bug that, yes, can be dangerous depending on your pre-existing health issues and your age. The thriving economy has been reversed because of the effects of the situation, and there are a lot of irrational things that are happening, like extreme hoarding of toilet paper and hand sanitizer. As you all know, the stock market has seen some ridiculous, heartbreaking drops within the last couple of weeks. Not too long ago, I made a video about my profits in the stock market, but never mind that video, because as of Monday, March 16, 2020, I found my Robinhood portfolio down over $8,000, and not to mention my 401k was down over $15,000. I was very shocked and disappointed to see how fast and how much my investing accounts went down, but there was also a part of me that was really excited to see all kinds of awesome companies with stock prices at 52-week lows. I have been waiting for a while now to be able to jump in on some company stock that has some awesome future growth potential. I'm a long-term stock market investor, and I will be looking at a lot of companies I would like to buy stock in, but for right now, these 3 have my attention. There are no questions that the airline industry is taking one of the biggest hits of all. That's why I've been looking at Delta Airlines. Delta Airlines is one of the biggest airlines in all of the world and comes in second in size compared to American Airlines, but it had more revenue than them last year. They came in second in size because American Airlines has a bigger amount of fleet, but they brought in more revenue than any other airline according to different sources, and one of them being insidermonkey.com. If you're an investor, then it's safe to assume that you know who Warren Buffett is. Not too long ago, Warren Buffett increased his stake and bought nearly $46 million of shares, increasing his ownership of the company to 11%. And the dividend yield Delta pays their shareholders is sitting at about a hefty 5%. Something about that puts my mind at ease, and it makes my decision of buying even more clear. With how much our world relies on airlines to move us around and connect us all over the world with our friends, family, trips, and business gatherings, it's safe to say that after this big recession we are currently experiencing, we will continue to travel and vacation. There's a chance that some airlines will go bankrupt, but I have confidence that the government will not allow that, at least for the larger companies. Even President Trump said the airlines would be bailed if need be. I have a hypothesis that when the time comes and we aren't stuck in this crisis, we will see a big increase in flights all over the world. A lot of people have canceled trips and vacations that have been temporarily postponed, so we will see a crazy demand for flights once this beer bug passes us by. I do believe the airlines will recover eventually, although we might see things get worse before they get better. But I am not worried because I'm a long-term investor and I have faith in our economy. Again, this is just my opinion, so it may or may not make sense to you. Please do your own due diligence and don't blame me when the airline stock keeps dropping after you buy in. The second stock I have always had my eye on is Microsoft. It's evident that Microsoft has been a very large and profitable company. There's a reason why my portfolio consists of a lot of Microsoft stock, and I will tell you once you hit that like button down below. It only takes a second. As we are advancing with technology, in my opinion, it's a must to own tech stock, especially some like Microsoft. A major reason why I will be buying more of this company stock is because they have been financially smart and they're sitting in a hefty pile of cash reserves. Unlike the airline industry, Microsoft will not be needing any financial aid from the government as they are well positioned with cash and low debt compared to other large companies. They have enough cash reserves to withstand this stock market crash. Even with the huge dips we have seen in the stock market, Microsoft's stock has managed to grow at almost a whopping 50% year after year for the last 5 years. It's insane to think that their stock can still take a huge hit and the 5-year average is still massively profitable for its long-term shareholders. Microsoft has gone down in value, but so has almost every other company out there. The difference is that Microsoft is not taking huge profit losses like other entertainment, restaurant, and travel sectors. Microsoft has less layoffs over other industries because it's a tech company and it has the advantage of having a lot of their workforce work from home, and therefore a lot of people are still working. They're also looking at good income growth within their cloud-based services like Microsoft Azure, however you say that, which is a cloud computing software, and their video gaming console Xbox. We should see a lot of more people using Microsoft in either form due to having to work from home and for entertainment purposes, since you can't go outside and you can't attend outdoor events and gatherings. Seriously, all sport fanatics can't even tune into sports to watch their favorite basketball and baseball team. I'm sure a lot of people are coping with it by playing video games such as 2K and MLB The Show. And honestly, they'll be doing that on their favorite gaming console, the Xbox. Microsoft is a must buy in my eyes, and I don't see a lot of risk buying as there's so much upside to owning the stock. The third stock I'm going to be buying is not an individual stock by any means. This stock is referred to as the Vanguard S&P 500. The stock is what's called an index fund. So it's a fund that tracks the benchmark of the S&P 500. The S&P 500 is a fund that consists of the 500 largest US publicly traded companies. In easier words to understand, the stock is like owning the 500 largest companies in the US. I'm a huge fan of owning the stock because of the lower risk it imposes and because it's a phenomenal way to diversify your investments. For example, you have a stock like Amazon that is currently trading at over $1,800 per share. Some people don't even have the money to buy a share or just don't want to risk that much money on one single stock. So a stock like VOO allows you to own a fraction of the company with the lower cost. The S&P 500 is what I like to invest in when it comes to the stock market because of its track record. For over 90 years, the average return of the stock market has been hovering around 10%, which is fairly good because there have been recessions and bear markets in between. It is important to look at the long track record because you have to account for the good and the bad times in the economy. For the average investor, the S&P is good to invest in because you have ownership of the 500 companies that pretty much make up the huge majority of the US economy. It is also important to remember that there are so many companies out there that can make you a lot more money than just this fund itself, but the downside is that your money is exposed to more risk, especially if that company takes a hit or goes bankrupt. When it comes to long-term investing, you want consistency over huge gains because it usually guarantees smaller, safer, and more consistent returns. I am a huge fan of many single company stocks, but I also like the ease of mind of having the diversity in my investments. This fund has been on a rampage the last decade with an average return of 13.6%, so that's why I will be buying as this stock continues to go down because sooner or later it will continue to go back up and resume to normal. I want to remind everyone who is looking to dip their feet into the stock market for the very first time, and also all you high rollers that know way more than I do, to not take my word as advice. I could be wrong and I can't predict the future. I may continue to lose value in my portfolio as prices keep going down. As a matter of fact, with what we know today about what's going on, I do predict it will continue to decline. But overall, something that I do know is that our economy will continue to prosper over the next 10, 20, 30, and 40 years ahead. And if we look back, we overcame the Great Depression to the Great Recession and everything in between. Investing in the stock market is like a roller coaster of emotions, and you must learn to tame those emotions. I also want to advocate that before you invest, I suggest you focus on paying off any high interest debt and have cash set aside for emergencies before you start putting money into a volatile market as we are seeing now. The money I put into the stock market or any investment is money I'm okay risking, and I won't be compromising my day-to-day life and my finances. Before you invest in anything, please educate yourself and do your due diligence. Lastly, manage and risk accordingly to your financial situation and your age. I am willing to risk more because I am relatively young and I have zero consumer debt. At the end of the day, investing in anything can be risky, but one of the biggest risks you can make is not investing in your future. With that being said, thank you so much for watching this video. I hope it brought a ton of value to you, and please don't be afraid to give it a like. Comment down below for the YouTube algorithm, and most importantly, subscribe to the YouTube channel. Again, if you don't have a Robinhood investing account and you want to start investing, there's a link in the description down below to get you started, and both you and I receive a free stock. Follow me on Instagram if you want to follow my journey, and I will catch you guys in the next one.